Overview of Accounting Standard 4. Accounting Standard 4 deals with contingencies and events occurring after the balance sheet date. There are two things. One is contingencies, another one is events occurring after the balance sheet date. Let us now first understand what are contingencies and what are events occurring after the balance sheet date. Contingencies. Contingencies is defined by the standard. Contingencies is defined by the standard as contingencies is defined by the standard is a condition or situation. Is a condition or situation the ultimate outcome of which may result in gain or loss that will be known or determined on the occurrence or non-occurrence. Occurrence or non-occurrence of uncertain future events. Uncertain future events. The standard defines the contingencies as a condition or a situation, the ultimate outcome of which may result in gain or loss that will be known or determined on the occurrence or non-occurrence of or any uncertain future events. That is called contingent event. So, what is the accounting treatment for contingency situations? Say contingency situations as we defined here, it may result in gain or loss. Contingency event may result either gain or loss. Contingent event may result either in gain or loss. So the standard says in case of contingent gain, no recognition. In case of contingent gain, no recognition. The reason being, if you recognize any contingent gain, in future you may not receive that gain and you will end up recognizing in the books as a gain. So that is the reason the standard says don't do anything. In case of contingent loss, you have to recognize. Okay. So now you may say, sir, the event is uncertain, the gain or loss is uncertain, the situation is uncertain. Okay, then how will you recognize loss? Yes, it is prudent to recognize loss. The reason being, with whatever conditions available as on the date of the balance sheet, you have to calculate appropriately what will be the situation in case it turns out to be loss and arrive at some value and recognize it in the financials. So all losses has to be recognized though they are uncertain, and for calculation purposes you have to take all the probabilities in your best possible evaluation and recognize that in the financials. So contingencies are of two types, contingent gains or contingent losses, and in case of contingent gain you need not recognize in the financials, but in the case of contingent losses you have to recognize prudently. Okay, now let us see what is events occurring after the balance sheet date. Events occurring after balance sheet date. What is events occurring after the balance sheet date? The standard defines events occurring after the balance sheet date as any significant event that is occurred after balance sheet date, say for example 31st March 2022, but before approving financials by board. Board here means either board of directors in case of company or any corresponding board in case of other entities. So, any significant event occurring after the balance sheet date, but before both approving the financials. Between this period, if any significant event, it is only significant event, not all events, only significant event, then it has to be taken into books of accounts. Again, the standard gives more clarity which kind of events has to be considered and which kind of events has not to be considered. Say, events occurring after the balance sheet date. There are two types of events where the evidence of such condition existed on the balance sheet date. Suppose that condition was in existence as on the date of the balance sheet. Now another situation is evidence of such condition is not existed. That means that condition was not existed on the date of the balance sheet. So in case of the condition being existed on the date of the balance sheet, then it is adjusting event. If that condition was not existed on the date of the balance sheet, then it is non-adjusting events. In case of adjusting events, the accounting treatment is you have to adjust as the name says, adjust assets or liabilities. In case of non-adjusting events, not to adjust assets or liabilities, but in case of this one, you have to report in the board of directors report. See, there are two kinds of situations. One, that particular condition which has taken place after the balance sheet date, but before the approving the board of directors financials, then you have to adjust. It is called adjusting event, and it has to be adjusted in the assets or liabilities of the financials. In case that particular significant event was not existed on the date of the balance sheet, then you should not adjust in the asset and liabilities, but it has to be mentioned in the board of directors report. Why? Because it is a significant event, and the people who are using the financials, for either it may be shareholders or any external agencies, then they should know about this significant event because it has occurred after the date of the balance sheet, before approving the balance sheet by the board. Say for example, what is simple example for not existed on the date of the balance sheet is, suppose a significant fire accident has occurred after the date of the balance sheet, but that cannot be adjusted in the assets and liabilities because the particular condition was not existed on the date of the balance sheet. It occurred after the date of the balance sheet, so it should not be adjusted in the assets and liabilities, but the value of estimated value of the loss of that particular fire accident, which was a significant fire accident, then that amount has to be mentioned by way of a note in the director's report. This is the difference between adjusting event and not adjusting event. Remember, adjusting event, adjust all assets or liabilities as the case may be. In case of non-adjusting event, report it by way of a note in the board of directors report or approving authority report. Hope you understand the accounting standard for contingencies and events occurring after the balance sheet. Thank you.